First of all, what have we learnt in ARM's pre-IPO filing?
Well, we don't think there were too many huge surprises. In terms of the ARM China, getting the accurate figures was, of course, useful, but I think everybody was aware that it was quite a significant proportion. And seeing the trend does show that its dependence actually increased last year, so that might be a slight concern for investors when you consider the tensions between the US and China, especially because RISC-V as an alternative to ARM has been gaining some traction, and it would make sense for China to put significant money behind further developing that ecosystem, because it would be a lot less subject to any sort of sanctions from the US. So that certainly represents a risk for ARM in terms of its China earnings, and that was probably the largest takeaway from the actual filing. But we think that there weren't too many surprises in there. The main issue that investors are likely to focus on is probably valuation, just given that SoftBank is targeting a rather hefty multiple, especially compared to some of its peers.
So let's talk about that. The expected valuation could be as much as $70 billion. As we said, it would be the largest so far this year. How is ARM going to justify that type of reported valuation, given some of the concerns that you've already highlighted, whether it's politics or beyond?
Yeah, we think that's going to be a little bit difficult if you're being extremely sober and purely objective and logical about things. We think this is probably going to have to be pitched based on the AI narrative and sort of just a pleasant story or dream, in a sense. If you think about it purely objectively, when you compare ARM pre-SoftBank's investment to where it's at now, its revenues have grown about 77%. But its operating profit has barely increased. And if you compare that to some of its peers, some of the more richly valued peers, such as NVIDIA, Cadence, Synopsys, they've all grown revenue in the range of either doubling it or, in NVIDIA's case, increasing it more than 5 times, but also actually increasing their operating profit margins. So that's in stark contrast to ARM, whereas something which is a bit more comparable, like, say, Qualcomm, which grew its revenues also about 70% and increased operating profit by about 25% over that period of time. Its EV to revenue multiple is about 3 times, whereas at the quoted valuations, ARM would probably be looking for more on the order of 20 times. So obviously, there's a very stark contrast in terms of the valuations you could look at if you're purely looking at historical track record. With that said, though, the fact remains that a lot of banks have made loans to SoftBank backed by what would be the proceeds of this IPO, so they would be highly motivated to ensure that this succeeds. And so you have quite a few banks which will be pushing the story quite aggressively, and it is a relatively conducive environment in terms of pitching the AI team for ARM. We're not entirely sure that investors, especially institutional investors, will entirely buy this, simply because for NVIDIA in particular, which is the darling of the stock market right now, most of the excitement seems to be on the profit margin side. And it's highly unlikely that ARM would actually be able to increase the sort of yield that they can capture based on NVIDIA's revenues from such a revenue stream. That tends to be much more fixed, and they do have a licensing agreement with NVIDIA, which they agreed to when SoftBank tried to sell them. So we think there'll probably be quite a bit of skepticism. I'd be surprised if they actually managed to pull off 60 to 70 billion. Our own thoughts are probably more in the region of 30 to 40 billion, which perhaps some of the more sober analysts seem to be in that ballpark.